Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Sumit Rai, MD and CEO at Edelweiss Tokio Life Insurance, joining in. Welcome to the show, Sumit. My first question coming to over here is that the pandemic overall has actually pushed businesses across sectors to change the way they operate. And the insurance sector itself is not an exception. However, it has been one of the most important sectors, at least in times of pandemic. The work, I'm sure, has increased as well for the sector, taking into consideration the quantum of claims that would be coming. What is your view as to the impact?
Thank you for having me on the show. Uh, you're right. I think the last 6 months have been very unusual in how we've gone about doing things. And, insurance in some senses is a sector that's been probably a little bit more impacted because a lot of our business traditionally has been face to face. Insurance is something that has traditionally been brought face to face between two people sitting across a table and chatting and figuring out what needs and requirements are. And suddenly in March and April, we discovered that that model had come to a complete shutdown.
Mm.
And I think what has happened since then is a testimony to two things. I think it's a testimony to our ability to be able to be flexible, our ability to discover new solutions. When I say our, I mean the entire insurance business, and I'm saying this is across whether it is general insurance, whether it is health insurance or life insurance. So I think we've seen a lot of pivoting away from the face-to-face model of physical meetings to a lot of digital work, and digital, of course, also of two varieties. One thing that we've seen is a lot of consumer interest in insurance during this period. So visits to, for example, websites have increased significantly, uh, especially when it comes to protection. So health insurance, for example, or term life insurance, for example, have seen significant increase in interest from consumers during this period, and a
Mm.
lot of self-research, which was not as prevalent earlier. Certainly, I think because of a surge of interest, I think a lot of people are doing it themselves on websites. So that's been one trend that we've seen. The other thing that we've seen is even for people who are not comfortable being online, they were very comfortable meeting people digitally. So, just give me a minute. So whether it is whether it is about meeting people online, whether people meeting people on platforms like Zoom or Teams or any or WhatsApp video, for example, things that maybe a lot of people were not very comfortable with earlier. That's changed significantly because there was an interest. And so what we were able to do, and about I think insurance sector in general was able to do, was to pivot to these platforms and continue business largely in a digital fashion, remote meetings rather than physical meetings,
Mm.
but pretty much continue to work. And it's taken time. Some people have adjusted quicker, some others have taken longer. Obviously, younger people have adapted more quickly to it. I think they were a lot more used to some of these platforms. Older people took a little bit more time. And I think it's also been a question of being able to enable people to use these tools. So it's one thing is to provide the tools. The
Mm.
other is how do you enable people to provide these tools? So I think a lot of effort in training people, in retooling them for what digital platform meetings look like. And it's not just about having a conversation on a video platform. It's also about saying, if you want to see a brochure, can I give you a quick digital brochure that you can see, and stuff like that. So a lot of that needs preparation. Uh, and I think insurance companies in general have pivoted around well. So overall, what seemed like being significantly disruptive in March and April hasn't been quite as disruptive. I can't say it hasn't been disruptive, but it hasn't been quite as disruptive as I think many had expected or feared actually.
Right. And with this, have you seen a change and a transition from, say, the extended lockdown that happened between the month of March, April, May, and June? And now, when things have started to open up, how has the transition been, and how have you as a company managed?
So in the early days when it was really a tough lockdown in March,
Mm,
April, and May, I think a lot of focus was essentially largely around digital platforms completely. A lot of focus was on enabling people, like I said. How do you train them? How do you make them effective on video platforms and stuff like that? And people, customers also did not want to meet, quite honestly. Nobody wanted to meet in physical formats. So
mm,
a lot of it was around digital formats. I think what's happened in the last 2 months as things have opened up across the country, different forms, is what we're now seeing is a mix. A lot of meetings happening on video, a lot of closures, especially in larger ticket sizes where consumers, want the comfort of having met somebody. A lot of those are being followed, therefore, with some degree of physical meetings also, with, of course, due precautions. So that is happening. But to my mind, I think the one thing that we are clearly seeing is a mix of digital and the physical world is, I think,
mm,
okay, because what it does at one level is also increases productivity significantly for everybody, right? So if I had to make 3 calls in a city like Mumbai or in a city like Delhi, it'll probably take me the full day to be able to do 3 calls because they'll be in different parts of the city. Today, if I was in Delhi and say Delhi or Mumbai, I could do as many as 6 to 7 calls a day because I'm largely digital and based out of one location. But I go for meetings only when they're at closure stage, and therefore my productivity is so much higher. So I think we're seeing that, and I think it will sustain for some period of time. Uh, in and what we've often spoken about as omni-channel is now, in some senses, coming to fruit, right? So whether you are buying it digitally or you're buying it physically, whether you're going online or whether you are,
mm.
expressing an interest online and somebody is following up with you in the digital world, followed by the physical world. I think all of that is coming together now. And to my mind, I think therefore, over the next 12 to 18 months, we will see more evolution of this. But are we going back to a purely physical world of the way that it used to be? I think that's going to be a little bit difficult. Some part of the business will revert to that. There are some who are inherently more comfortable in the physical world, but I think a mix of digital and physical is where we are headed now, very clearly.
Right. And then with this, if you could just help us understand, one thing is that yes, it has created more awareness amongst people towards insurance. Is there any way you've been able to quantify the same?
Um, to quantify it, okay, let me put it this way. Let's take life insurance, for example. Like
Mm-hmm.
for 6 months of the year, has actually seen a negative 11% growth, right, as a sector, the entire 23 sector. Uh, my belief is this number would have been a lot higher had it not been for the fact that the general public had certainly an interest. I think the other way to look at it, a good surrogate for that, is how term sales have gone up. Okay, term sales is to my mind something that has been the phenomenon of last 3 4 years, where I think public has realized, the average consumer has realized that there is a need for protection in life. And I think COVID suddenly made protection a big priority for everybody in life. Now, whether you see it in health insurance, which has also taken a big jump, the full numbers are not out for the industry yet, but health and term are two segments which have seen a big leap. A third segment that has seen a leap is also reflective, to my mind, of some degree of consumer interest is income products.
Mm.
So looking at saying, let me put together some money so that, if what I'm seeing in COVID ever happens again, I should have at least some semblance of income coming in from some of my current savings and so on.
Mm.
So these are 3 segments which are clearly indicating, well, I will not have the data to kind of, the data is
Correct.
still not fully available. But these are 3 segments where we're clearly seeing enhanced consumer interest, and more importantly, for what was traditionally not being seen as a product where consumers ask for the product. Consumers actually logging in, like I said, if you look at the online platforms, they are seeing a significant increase. Our website visits, for example, in the last 6 months have gone up by about 22%,
Mm.
right?
Okay.
So it's a reflection of two things. I think people have more time, they're more in the digital world, and so they're surfing, but
Mm.
people only surf when they have interest, right? So the fact
Correct.
it is up 22% indicates that people are looking for alternative solutions of insurance, because the what used to be latent is now apparent,
Mm.
right? So need for insurance has become apparent. Earlier it was usually a later need. Yes, I will think about it. Yes, it's a good thing, but what, I'll do it tomorrow.
Mm.
I think the tomorrow shifted to today is the big thing that happened out of COVID.
Right. And so, but do we have any idea of what percentage of population actually took interest in buying insurance to cover healthcare emergencies and infections and pandemics versus, pre-COVID and now in terms of India? Do we have any numbers on that?
I think it would be early stages, Hiral, largely because what is happening is today, for most of this, the purchase process is still digital. So some
Mm.
part, at least that would have been more physical, not comfortable with digital, is still
Mm.
not on. And so whatever we get will be in some senses not a complete picture of what is happening. But let me put it slightly differently. If I'm not mistaken, I think over the last 6 months, the number of policies sold in life insurance is up by about 7 or 8%. Even as growth or premium has gone down,
Mm. Mm.
right? And that, I think, is completely a reflection of the fact that more people are looking for pure protection as a start play, right? And so that is what is because pure protection usually comes at a lower ticket size, right?
Correct.
So increase in NOPs, even as we are seeing a decrease in life insurance premiums, is usually an indicator that there's more term being sold. And term is, in some cases, in some senses, actually has become a pull product today. It's a product of demand, consumer demand. Life insurance traditionally has not been a consumer demand product. It's a consultative product where you create the need and then you sell. And today, I think a lot more consumers are aware of the need and buying. But I think the numbers for us to be able to truly reflect and see what trends are looking like will take a little bit more time, as more physical world also comes back to see whether there's truly been a substantial increase in consumer interest.
Right. So, with all of this, what are the kind of changes you had to bring about, in terms of business and in terms of products? Because I'm sure a lot of products would have evolved out of this pandemic right now. What are the categories where you had to really innovate and get out, probably change the way you looked at products earlier?
That's an interesting one. And I think we had to innovate around two things. We had to innovate around processes,
Mhm.
and we had to innovate around products. When I say processes, one of the things that we did in late March, as we shut down around the month of March, so we were about a week ahead of the country in terms of offices. And by the 27th, 20th, it was clear that we were in this for a while at least. I don't think even then we thought it would be 6 months or 7 months as we are sitting here today. But we were sure that it was going to be for a while. And so we pivoted pretty quickly to create
Mm.
a program called Dial for Success. And Dial for Success was actually just a program that we created for all our physical world sellers, for them to be able to use platforms, video platforms like Zoom and WhatsApp and Teams, whatever. Uh, we created training programs for them on how to use these platforms. We created training programs around the etiquettes of using these platforms. We created completely new scripts, for example, as to how to speak to customers, how do you set up meetings,
Mm.
and so on and so forth. We created digital knowledge tools for them, tools that they could also share with consumers. We created a lot of new calculators and other things that consumers could kind of play with themselves. So we did all this. These were digital can become pretty dry by itself. Two people talking on video can be pretty dry and you can lose focus. But using
Right.
some of these tools, you can keep engagement going, right? And that whole process of reimagining a conversation with consumer over a
Mhm.
platform, creating the right tools to keep the conversation engaged, creating, various, while we did have it earlier also, various payment mechanisms, integrating them into the sales process, helping sellers. Our payment mechanisms were geared for online. They were not geared for, people who were selling physically face to face across table with people. And then we had to make that move that you would now send a link and get the customer and walk the customer through how to pay through the link and so on and so forth. None of this was really very prevalent before this. So training people to do all of this while retaining consumer engagement was one big process innovation that we had to create. And I must say, I was surprised by how quickly people adapted to it. As somebody who's sold life insurance or who's been in the life insurance business for the last 20 years, I always thought we were never going to be able to get away from face to face. And suddenly, one pandemic in 6 months has fundamentally changed behavior in a way that all of us pushing through for the last 5, 6 years on the digital front were not being able to create. Right. So that's part one of what we did. Part two, as you so rightly mentioned, was product. And what is it that the consumer is looking for at this point of time? Like I shared earlier, I think two things that became pretty clear early on as we were talking to consumers. One was protection. Okay. Uh, Mortality is something that we generally don't like to confront.
Correct.
Mortality is a taboo topic that we would rather not discuss. Yet, I think what COVID did was to bring mortality to the top of the discussion. And it forced a lot of people and families to think about what happens if something goes wrong. And so I think immediately one reaction that we saw was in two lines of products. Health insurance sales spiked significantly and term insurance sales spiked significantly. These are both relatively inexpensive ways of managing some steep expenses in case of, let's say, medical emergencies or of supporting families in case something did go wrong, right? So I think those two saw an immediate spike. I think the second spike that we started seeing around April is as incomes were kind of significantly disrupted for large sectors of society. And increase in interest in looking at income products and saying what can give me immediate income or income in 2 to 3 years to 5 years time. So whether it was annuities or whether it was guaranteed income, guarantees became a big thing. People wanted to move away from market-linked products or unit-linked products, which have seen a significant reduction in the market in the last 6 months. And a lot of market movement has been to guaranteed products. I think it's also got something to do with the fact that overall interest rates have been coming down, and so people are more sensitive to that as well. Have the ability to lock into a reasonably high rate of return on a 10-year, 15-year basis. I think people saw that as an opportunity. So that's the other segment that took off. Let me give you an example. We launched a product called Active Income, right? It is the largest launch that we've ever had in our history. We did in the first 60 days, the business that we did was almost 40% more than what we've ever done with any other product in the first, right? And normally when you would do a product launch in the physical world, you would have a lot of launches across offices, lots of events and so on and so forth. And here we did one launch event, a digital launch event, and we had 30,000 people attend that event. That just goes to how many, how much is the interest at this point of time. When I saw that count of 30,000, I asked my people to check if they were fake loggers or whatever. There's something going on. But actually, there were more than 13,000 people who logged in, and it completely surprised me. And that to me is a big indicator of how consumers are looking at some of this. So, at income and fixed returns, guaranteed returns, is the other piece that I think has really benefited from whatever happened in the last 6 months. And I think consumers are looking for that. They're looking for a certain degree of safety. Degree of protection is, I think, primary at this point of time. Speculation is lesser, and certainty or the desire for certainty is at a much higher level than I've seen in a very long time.
Right. So basically, we're clearly trying to say that there has been some bit of fear that has led to an increase in demand, and COVID is playing a role where the overall penetration for the insurance sector is expected to increase from here on. So with this, if you talk about the past, Sumit, there have been SARS, Ebola, etc. But COVID has hit the way nobody ever thought. How do you see this will actually shape the industry from here on in terms of innovation as well as customer orientation?
I think a couple of things will happen. I think our entire product development process will undergo a change. Okay. Yeah. Production will become even more important. It has been gaining importance over the last half a decade or so. I think it will become even more important because certainly that inherent need has been triggered off, right? What that will lead to is also more innovation in terms of features and the kind of protection that people can expect, right? So whether income guarantee in some senses is also, you could say, it's unemployment insurance. Don't have income, where do I get income from? I'll get it from what I saved at some point of time, right? But that's an indirect way. I think what we will see over the next 4 to 5 years is a lot more innovation around protection, income streams coming from protection tools. So if, for example, you had a term product, could you have an income stream that says that if you lose income for, let's say, up to 180 days over a period of, let's say, 3 years, we could give you an income over 180 days or stuff like that. So I think that is one. You'll see a lot of innovation around products over the next 2 years or so. And it will happen in two ways. So that's the other interesting thing that will happen. Some products will become more complex because they're trying to address more defined needs of a certain niche segment in the market. And other products could actually become much simpler. So if you've just seen what IID has done with Saral Jeevan Bima, which is really around a simplified term and a very simplified term that you could buy from any of the insurers. So that's at the other end of the market, a very simple product, which is suited for large number of Indians. Right. So you're seeing innovation now at both sides. You're seeing innovation at the very bottom of the market. A simple product, easy to understand, easily comparable, could be purchased by anybody. Also, at the same point of time, we are also seeing this other innovation where people are now constructing products we will end up constructing products for very niches of people. Right? So that will happen. I think the other thing that you will see a lot of innovation. So that's on the protection side. You will also, I think we will see a lot more of health products, which are more niche. So health in India in general has been around the concept of hospitalization and hospitalization insurance, and what we call indemnity in the industry. And I think alongside that, you will see a lot more cover for diseases. We have had disease kind of products for a while in India, but they haven't really taken off. I think they will start taking off a little bit more now. And around those disease platforms, because they will be a little bit more affordable, they're not omnibus products. Around the disease platform, you will see more innovation about how people could benefit from those products. So that's on the health side. On the life side, again, I think the other interesting thing that we might see are things that have not happened in the country so far. So, for example, unemployment insurance or income continuance insurance. Some of that stuff doesn't really exist in the country today. The other thing that could happen is long-term care. We don't have long-term care in the industry also today. And maybe long-term care is something that will come out of this as well. One of the things that has happened is it's clearly shown how prone to any misfortune our senior citizens could be. Right? And today for our senior citizens, for example, there isn't much choice of insurance cover in general, or wherever it is, it's a fairly expensive choice, right? And I think that's the other piece, which in terms of coverage like long-term care is something that I think could also take off over the next 3 to 5 years. But some
Mm,
of these will take, they are completely new concepts. They will take time to be seeded in the market and they will take time to take off. But I
mm.
think what this whole last 6 months has done is create a lot of awareness about the things that could afflict society in general and what role does insurance play in kind of helping society with that.
Right. So with this, what's the kind of GWP growth are you expecting this fiscal? Taking into consideration greater uncertainty, because the expectations are for a faster recovery from COVID, and are we shifting towards a slower recovery? Probably. So what's the GWP growth that you're expecting?
So before I go into GWP, I think insurance can't be dealing from the economy as a whole.
Mm,
At the end of the day, a subset of the economy. Um, and the current expectations, for example, are let's say a minus 10, minus 11% kind of GDP growth for the year. In that context, I think it will be lesser hit. Overall, I think the industry could see anywhere between 5 to 10% growth this year
mm,
at an Edelweiss Tokyo Life level. Our first 6 months, we've seen about 14% growth in GWP. We're one of the few insurers actually that have seen growth in the first half of the
mm.
year. And I would believe that we should be actually be able to stick to that growth or actually accelerate from there. So say between 14 to 18 to 20% is where we would see growth in the second half of the year. The reason I'm a little bit uncertain in giving you the number, normally you would find a lot more
Correct.
certain about numbers, is because there are a lot of uncertainties at play, a lot of doubts still. For example, does the festival season bring on a second bout of COVID surge? And how do we react to that and all of that? I think those are uncertainties and we're not clear about it.
Mm.
But I would believe that between 15 to 20% is what we should expect this year.
Right. And then with this, taking COVID into consideration, what's the quantum of death claims that we've received so far?
Actually, death claims haven't really surged, right? Death claims for us are at about the same level as they were last year.
Mm,
And it's the same in the industry. I think the claims have surged is in the health industry where hospitalization has been more expensive and more prevalent. And so the health industry is seeing a slightly higher increase in claims as far as I can hear from my friends
mm,
in the health industry. But on the life side, I don't think we've seen any disproportionate increase in claims. It's not as if suddenly the mortality tables have been upended in any way. Uh,
mm.
we are not seeing that. I think mortality by and large is okay. We've had 38 COVID claims. We have
Okay.
the largest book. We are a 300,000 customer book. And we've
Mm,
had 38 claims come in on account of COVID itself, all of which we've settled. There's one which is in the process. The other 37 have been settled. But so far, yeah, we haven't seen a very significant, actually, any significant jump in mortality at all.
right. And with this, when do you think we will see normalcy back in the insurance sector?
I would say that the last 2 months, if we look at the industry, at least half the industry has been growing, though subdued. Before last year, we were, let's say, growing at 11,
Mm,
12%. Forecast for the next few years was anywhere between 12 to 15% kind of growth for the industry as a whole. I would say 21 onwards, 21, 22 onwards, we should pretty much be back at that. Some of it obviously depends on how vaccine occurs and how life gets back to some degree of normalcy. But I would believe that in the long term, over a 5 year period of time, I don't think we will see very significant impact on that growth perspective that we had between 12 to 15%.
mm, mm.
Uh, in the first year or so, it might actually be even a little higher. Obviously, what will also happen next year is that given the depressed base from this year, growth will be higher in any case, right? Even if we go back to our long-term natural trend line, the growth will be.
Mm.
So my reading is that over a 5 year period, if we look from here, that 12 to 15% forecast that had been for the industry should pretty much be held on to.
Right. And lastly, overall, Sumit, with regards to where capital infusion goes, do you think there is need for capital infusion right now?
For Edelweiss Tokyo Life.
Yes.
So we have a long-term business plan that we work with our shareholders, which alongside business also has capital requirements. So there will probably be some requirement of capital next year, which is in the long-term plan that has been agreed with the shareholders. So that's as per normal. This whole situation has had no impact on that.
Right. So we don't see any capital infusion, at least as of now.
We don't see a capital infusion as of now.
Right. All right, Sumit. Pleasure speaking to you. Thank you for sharing those insights. Great stuff that we've understood from you as well for the sector and how it's going to pan out from here on. It was a pleasure to speak to you. Hope to see you back soon again. I hope you enjoyed the conversation as well, and stay safe.
Thank you, Hiral. It was an absolute pleasure talking to you, and would look forward to be back sometime.
Thank you so much.